Mr. Suresh S Iyer. He's the MD and CEO at Canfin Homes as well. Suresh, hi, good morning. Thank you so much for making time and speaking with us. I wanted to begin by discussing your loan growth momentum this quarter because it seems to have moderated a tad bit. 18% this quarter versus 20% that we had seen in the earlier quarter. What kind of growth rate should we envisage in FY24? Because a lot of industry, stalwarts are talking about moderation in loan growth.
Good morning, and thank you for inviting me, first of all. So you are right, but if you look at the sequential growth as well as the overall growth in the loan book, there is a positive growth. And to the year, there has been a little bit of moderation in the demand because of the rate of interest hike that the market has witnessed. But now that the rates have almost stabilized, going forward, if the rates start coming down, the demand should pick up because there is a good latent demand in the market. So I think the coming year, if you look at it, there should be a positive growth and it should be on a higher trajectory now.
Higher trajectory means over 20% loan growth or 18 to 20%, any broad range?
So 18 to 20, we are quite confident we'll be able to maintain in the loan book. And incremental disbursements also, this should start picking up. That's why the 18% to 20% will be retained.
All right. What about the outlook when it comes to your net interest margins as well? Because they've moderated around 80 basis points on year.
Right.
In the light of the fact that we have a rising cost of fund environment, what's your expectations on cost of funds and with respect to that, the resultant impact on net interest margins?
Yeah, sure. So if you look at the, our net interest margin, in fact, in the last quarter, we have slightly seen an improvement in our net interest margin. That's mainly because on the liability side, the entire impact of the rate hike has been witnessed in our books. Whereas on the asset side, because we have a phased manner in which the reset happens from the customers, so there is still a 60% book where the increase in the rate of interest is yet to be passed on in parts. So that we will start witnessing in the coming quarters. So we expect the net interest margins to be stable or slightly better going forward.
Can you walk us through just levels on that when you say better?
Sorry, can you repeat that? I just lost you.
I was just probing a little bit more about the number. When you say better, what's the number you're targeting?
So we have a present spread of 2.45. So we can expect 2.5 because there's still about 60% where we have some rate impact yet to be passed on. So 5 to 10 bips improvement in the incremental spread and the NIMs will help. So that will be impact the NIMs also about 5 to 10 bips can be looked at.
Okay, that was about the net interest margin as well. But I wanted to check about the provisioning as well. That seems to have spiked a bit this quarter and again, a bit higher than what Street was expecting. Is there any pressure you're envisaging when it comes to the asset quality?
No, actually, if you look at it, our gross NPAs as a percentage have come down from 0.64 to 0.55. So that way, our present portfolio is behaving very well and we are not witnessing. However, as a conservative measure, we have taken a little bit of provisioning. In fact, in the last year also, in the last quarter, we had a 15 crore kind of additional provisioning that was there. So we have continued in the same range in this quarter as well. And it's just so that the PCR also, if you would have seen, has improved from 0.52 to 0.62.
The home loan market is getting brutally competitive because SBI, they're coming out with a clear ambition, less profit but more market share gain. You got fintechs which are now coming up with new innovation to distribute the home loans. What happens to a traditional bank-based NBFC like yours when there is so much of disruption and so much of push coming from, let's say, large players like HDFC Bank, HDFC and SBI?
Yeah, so first thing is that we have a little bit of an edge in terms of the geographical penetration that we have. So the newer players who are coming in, including the fintechs who are coming, are more in the major markets or in the urban and metro cities. So we have a slight edge in terms of the geographical penetration that we have in the deeper pockets. So that's what is going to help us in getting the business. And if you look at our profile of salaried segment, in fact, we have a good salaried segment even in the slightly deeper pockets in the district headquarters and all those places. So we don't see too much of an impact in terms of this. And in terms of the market also, overall, it is growing. So even if there is a little higher competition, we can still have a sizable place in this market.
What's the sense when it comes to your asset quality as well? Because that has improved marginally. What's your take? Do you think that you can maintain your current levels of asset quality?
Well, of course, we are quite confident that we will be able to maintain the asset quality because the profile of the customers and the selection and the onboarding of customers is very stringent quality terms that we are maintaining. So I believe we'll be able to maintain a good, healthy credit quality.
There is a stress in the rural income. But if I look at the low-cost housing, the low-cost housing is still growing. If I look at inflation, it is impacting the middle income, which is visible, whether I look at car sales, toothpaste sales, or even shampoo sales. But if I look at the upper middle class housing in India, it's doing well. So why is that? I mean, isn't this strange that one side there is a slowdown, other side housing demand continues?
So first thing is that the last few years we had a good demand mainly because of the CLS was also a very good support for this. And second thing is post-COVID, there is also a need. People feel that a good roof over their head, a stable place to stay, and the safety of a house is something which people are finding. So there is still a good demand. And you're right in the sense that the rural there is a slight disparity. In one side you have a growth in the other. But for home housing requirement, it's always very strong. So the attachment to the house is also much stronger as you go deeper into the places.
Suresh, we let you go on that note. Thank you so much for joining us and speaking
Thank
with
you
us
so much.
as to how the outlook is looking like. Hope to speak with you